Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly here. All right. Welcome, welcome, welcome. Hopefully everyone is able to rest up, get ready for the day ahead and all that fun stuff. As always, before we jump on the left side of the screen there, make sure to read through the live Trader Morning Prep PDF. Very important to go through and understand everything that is inside of there. If you need to read through that a little bit more time, you can simply just play back the recording and read it there, but I post it there every morning. You can also download it. Either way, it's there for you. Just make sure you're on the same page as everyone else. Along with that, grab the morning DP levels. These are posted every morning on the major 7 markets that we keep an eye on. Although we might have to add just a sub-crypto section, as well as a bunch of charts and things to give us a heads up as to what we're expecting. So make sure to grab that. Looking at what is going on for today, we've got... Where did my news calendar go? There we go. As far as the news calendar for today goes, the earlier news, the GDP, came out better than expected at 4.3% versus the forecasted 4.1%. We also had the jobless claims that came out better than expected, 684 versus 730. So some pretty good numbers so far this morning. And as we go into the U.S. session, there isn't really much else. There's not a whole lot else going on from really anywhere. There's some medium news announcements with some speakers, but that's about it. We do have nat gas at 10:30. I don't really watch natural gas much anymore, but news calendar is pretty light, pretty easy from that perspective. Looking at what's going on the bigger picture, we had that L5 that the market was trying to bounce off of, and although it hasn't broken through a low right down here, they did hit that zone of concern. That's where sellers are going to come back in, and well, they did. Pushed it back down, all the way back down to attempt the lows. This is either one final attempt, because you'll notice the size of this leg looks very similar to the last impulse legs that we saw down, even over here. They all seem to be relatively repetitious. So let's measure them up real quick here and see. This move down there, if we put it over here, that was the same size. Over here is the same size. Over here, from the start of the bear move, is the same size. Over here is almost the same size, although that was a little bit short. And that one looks like it's probably what started everything. So there's like 4 or 5 measured moves inside here, and it's completing one of them all the way down at the lows. So, I mean, realistically, there's going to be a lot of traders who are looking to potentially take profit on this. And we could also have, I mean, these are some pretty arbitrary wedges, but might have a wedge low down here coming off of that previous swing. Just given the angle of it, it would be something like this. It's pretty extreme. So sellers are obviously continuing to the downside, but honestly, it just doesn't look like there's a whole lot more space for them to keep going. Market strong bearish move after bullish news. Yeah, go figure, right? I mean, hey, crude oil's numbers were supposed to be bearish, but that went all the way up to 61, so... Over on the S&P, we've got that the 3-press high, and that 3-press high, all lower highs all the way across the board. Eventually, I was looking for the MACWAC to happen over here, but it didn't quite get it. And so that means that it's still applicable, still waiting. So sellers will be waiting for that to eventually come back off of that. But, I mean, this was definitely the optimal location. It just didn't quite make it up far enough. The overall movement to the downside is showing some pretty good movement. I mean, from a measured move perspective, we've still got a ways to go. And that would put us down to the -1 DP. That lines up a lot better. So it just doesn't look like sellers are done yet. Gold finally testing the lows of the wedge after failing at the highs of the wedge. A lot of sellers are going to be looking for a break down through the lows, especially considering that it, well, you know, it failed out of the highs. If it fails on one side, it's usually going to go out the other. And it didn't. It failed on the one side, then it bounced off the other. And I think that's taking a lot of traders by surprise. That's why we're seeing such a violent response. A lot of sellers who are potentially looking for this to break lower are realizing that something's wrong now. So if it does come back down here, it's just going to be buyers back down towards the 1725s. The horizontal support area around 27.1, I mean, the amount of support that's come in here is insane. There's obviously something going on here. And even when it does break down, it acts as resistance. Breaks back up, support, support. Now it's kind of chopping around it again, so we don't have a clean decision yet. But given the fact that it slid underneath and then popped right back up again would, I think, give some pretty strong clues as to what to expect next. Bulls are trying to get it to rotate back higher. It's just a matter of seeing if they're able to. Crude oil. Two-legged correction back to the top of the wedge, top of the channel, however you want to draw it up. Either way, they held it. We do have 2 lower highs in the sequence, or basically just the one. But I kind of look at that as 2 in the sense of looking for the third. We haven't had that yet. And the way that this is forming with such a steep angle, a lot of times the third one will happen more up here if it is going to be a lower high. So it doesn't, I mean, honestly, we could very easily get back up to 61 again and find a lot of selling pressure off the top of the wedge, everything going on up there. That makes a pretty big area of interest. As it stands, we've got that nice move to the downside, and a lot of support is anticipated to be coming in, not only off of the 1DP move, but this is also where all of the bulls kicked that whole thing off from before. They're back, so they've got a shot to kind of re-enter into it. They're also showing some pretty good divergences all the way up. These are some wide divergences, but they're coming in close. The euro is... man, I don't even know what you want to call the euro right now other than a train wreck. It just keeps grinding lower, and the MACD is showing that there is a definitive undertow, at least for now. If the market continues to slide down, though, that will change, especially with this amount of bearish pressure to the downside. This could be trying to set up, especially with this steep of an angle earlier on that wedge, and then breaking down. I mean, this could be some crazy channel to the downside. I mean... One of the big things when you have these huge moves that kind of kick things off, you need a catalyst or something that kind of starts it off and gets it all fired up. Well, what better thing than breaking below that gigantic level at 1.2? You know, I mean, if they're looking to start a fire, that's a good way to do it. I don't know. We'll see. This could all just be one huge amount of accumulation, but so far it's just been lower low, lower high, anticipating more of the same until that changes, I guess. I don't want to sell way down here, though. It's going to have to wait. We got Bitcoin rolling down on the L1 continuation through the lows and breaking down towards almost 50,000. This is, I mean, on the bigger picture, a very healthy correction that is needed. It needs to pull back to somewhere a bit deeper so they can get a value for a swing long, for longer term buyers, more than just, oh, it pulled back $10, guess we're going to buy it again. So when we're starting to get these good pullbacks, this is where you're going to start seeing all the news of, oh, Bitcoin's garbage and it's falling apart and all that. If it were garbage, companies like Tesla wouldn't accept it. I mean, that's just the period at the end of the sentence. That's not garbage. Realistically, from it being allocated into a business sense now, seeing huge companies accept it like that, I mean, Tesla's not the only one, but they're the ones that are going to start the ripple effect, at least. I don't think it's going anywhere. I think this is kind of the last shot that buyers are going to have to try to pick it up off 50K. We'll see. Maybe we'll be at 10K again later this year, or maybe we'll be at 100K. I'm more on the bullish side of that spectrum, but at the moment, it's still really, really low. Haven't shown any higher highs, higher lows, anything like that, so we'll have to give it a minute. Your screen's blurry again. Yesterday it was okay. So I think I figured out why that happens. It especially happens when I'm jumping around a lot. Like if I'm going from full screen to big and then back down again, showing all of them, the amount of rendering that has to happen is enough to cause it to be blurry so that it stays lower latency. That is probably due to the YouTube setting being set to automatic. If you set it to force in like a 720 to be on the safe side or a 1080 or whatever, then you probably won't run into that as much. But you're going to see that a lot more in the morning because I'm jumping all over the place with all these different screens. And as I'm talking about it, I'm making it worse because I'm doing more of it. It's a lot to handle. So. Over on Ethereum, we've got the bearish continuation of the downside off the L2. They did get the L2, and it looks like they're trying to create somewhat of a multi-tiered channel. When we've got this multi-tiered channel going on, well, I mean, the big thing that we're going to have to see now is, can they get a new low? Because we do have lower MACDs, etc., but I mean, I guess we'll just have to wait and see. Right now, we've got rising support, which, although it didn't look like it was going to hold it, did. My screen auto goes to 144p. I have to change it to 1080p manually every day. That's weird. Yeah. So that's probably the case. For me, on the crypto side of things, I think this is BTFD territory. They're finally pulling back to an area that's cheap enough to bounce back. There are definitely some winners that stand out to me, more so obviously than just your typical Bitcoin and Ethereum. Everybody knows you DCA those now, right? I think that's pretty common knowledge. But some of the outliers, like the EOS chain, has a lot going on for it right now. Cardano just got accepted into Coinbase, although I'm not a huge fan of Coinbase personally. That's a big volume pump. Every time Coinbase announces they do something, volume goes nuts. So it wouldn't be a surprise. We do also have a lot of the options expiration going back to Bitcoin, Ethereum. We've got some big options expirations that are, there's a lot of cash that's going to be expiring. So there's a lot of things that are happening this week from the crypto sphere that I think are going to be causing a lot of interest. To me, this is a BTFD, but I'm also of the HODL mentality, so. Where do you see Bitcoin bouncing? Psychologically, 50K. 50K is a monster of a zone. And if we go back to a larger, like a 4-hour chart, keep in mind this is a logarithmic. We do have some things that stand out that could potentially cause a reversal into a bear market. We have to be empathetic to both sides. I don't want to talk about a bear market because I'm a long-term bull on Bitcoin. But guess what? Bear markets happen. And we're getting a very, very clean signal. Do you see it? I mean, it should stand out plain as day. 3-press top. All over the place. This is a 4-hour chart, so the divergence isn't as clean, but even on the 4-hour chart, they're topping out. So if we see a continuation in a break lower, and it's, I mean, keep in mind, when I say break lower, I mean a lot more than just like this kind of crap. Markets love doing that kind of crap to trap people out. I'm talking like a real breakdown. Like this thing goes down not just to like not through 50, not through 45. I'm talking like getting to like 37, 35, really deep. Then they've got a potential. That's a heck of a drop to try to turn this market. Not to say that it's not possible, it certainly is. But once you start dipping down that far, then you've got value buyers that are on the other end of it thinking, hey, well, I know Bitcoin's not going anywhere. Time to buy. So I don't see it going anywhere. As far as a bottom, if I were looking from a value perspective and structural perspective, on a logarithmic chart at least, the most stands around 44,000. 50,000 is just a psychological barrier in the middle. But if it's going to hit 50 so far, it seems to slide through it. It wouldn't be a surprise to see 45. So it's not full bore bullish yet, but it's getting close. Definitely DCA, BTFD, however many other acronyms we can slam into a sentence. Looking at the start on the NASDAQ from the daily, we do have that really strong bear bar to the downside. And this was the concern we were talking about. In order, I don't remember who was asking, but hanging on to the end of the day. Was it you, Andre? Trying to hang on to the end of the day to see if it wants to rotate back higher. And we were talking about needing to see it get back above these closes, opens, start pushing back up here. This is why. Because if it starts pushing back down again, then you get a lot of that flush mentality where it just starts hitting all those stops. All of the candle gapping is now filled in. That creates a likely objective of at least 2 legs down. Okay, cool. I'm glad. I'm just making sure my memory is still good, or if I need a little more caffeine in the veins. I mean, we're getting a nice dip down, a 2-legged correction lower back to the bottom of L2, back to moving average support, back to this cluster of volume. And I bet if we were to draw some volume on here, we're probably going to see some heaviness down there. Let's bring that back a little ways. Oh, and I'm going to need that on minute, or we're going to be here for half a century waiting for this thing to load. There we go. Okay, now this is a very interesting point. This is only looking at the volume from top to bottom, and a little bit over, just because that's how NinjaTrader rolls. But even with that extra volume at the bottom, the majority, the POC, was here. That's what we just rejected off of, and now we have a lower high. So, I mean, sellers are definitely building a case for a move down here. Bulls lost their grip, and that's going to cause some problems for sure. 1 second. All right, I'm back. So looking for the continuation down, I mean, I think it's fair to say that sellers have a good reason to believe that they've got some oomph. Now, if we draw this volume forward and gain more of a perspective, we can see that, well, this is turning into accumulation, but we've only got 2 bumps on that accumulation, and usually accumulation shows up in 3s. Well, we haven't had the 3rd one yet, and what better spot than having a 3rd one down here? It just lines up really nicely. I mean, they might form a volume bump a little bit further up, down in these lows, and again, we're back in those L2s, L3s. So this will be a tipping point as we get closer to the 600s, under 600s. We're not there yet, so bears still have the context. Huge VVP up there at 13,450. Wow. And you can almost feel the 2-legged move to the upside ready to go. It just feels like they got to get this bear move out of the way and then reverse it back up. But we'll see. We haven't had that yet. Looking at the hourly. From the hourly perspective, I mean, it broke down. They definitely got that job done. Ended up having a nice breakdown into the end of the day with a flag continuation breakdown. If we look at it from the flag pull and breakdown, it's got, I mean, technically from the highs, it's already achieved the objective. From the impulse, it's got a little bit lower to go. That doesn't mean it will, but it does have a lot of the downside objectives kind of taken care of here. That's a monster of a bear bar, though, and it definitely has some candle gapping. Candle gap objectives to the downside, if this starts pushing further, project all the way down to 12,666. Oof. Be like McDonald's, round up, 667. Not much else going on. On the 15-minute perspective, obviously this is bearish. It's grinding its way lower. We've got a nice continuation down, but this is a really strong leg after the trend has been going on for a while. A lot more frequently that ends up being exhaustion. So again, I have a really hard time wanting to be a bear all the way down here. It doesn't make any sense. It's got to bounce at least a little bit. From the European session had an attempted breakout above the highs, which was rejected back down off of the L2. The L2 deviation pushed it back down towards the lows, which went to almost a full move down. If we measure from the top to the bottom, then we can see they went just below a half deviation, probably closer to like a 618 if you're using fibs. From there, they rotated back up to the highs again. And from that point now, we're just going sideways. They're not even making L1s, L2s at that point. So looking for a deviation higher, the Asian session deviation was at 12,850. That obviously held, and the market rejected all the way back down. When the market rolled back over at that point, we've got the European session now. So the European session deviation was attempting to hold, and might still be attempting to hold, mind you, here at 715. So that'll be the first deviation down if it wants to try to hold the European session at 715. The next one's going to be lower at 642.50. From the perspective of cycling, at least, we have a higher low, but we can still start there. It's an L5, which is a very common reversal. Holding an L5 on a reversal pattern makes a lot of sense. Usually with that, you see an L2. In this case, they barely made it back to an L1, and then when screaming lower, another L1, screaming lower, another L1, screaming lower. You can kind of see what they're obviously holding off of right now are the L1s, but this sets up for a TU L2, which is what I'm waiting for back here. So if we can get a pop back up into the 750s, that's where swing shorts, longer term shorts, etc., they're going to be waiting for that. So L2, that's going to be the one of interest. We'll see what they can do from there. Right now, this thing is just screaming lower. Yikes. See if maybe they can get a 3 press on the low. Got about 7 minutes until the open. Jeez, gold. Lordy, lordy. All right, well, I think it's fair to say that shorts are stuck on gold. Realistically, the first pullback that actually happens on gold is very likely going to get bought. That was a very nice bounce off the lows of the wedge. Still has a little bit of time until the candle closes out, but at 9:30 that'll close out the candle and that'll give us an idea of where an L1 pullback will be, which will likely be the scenario here for gold. So gold for an L1 pullback looks very nice. Jeez, I just slaughtered that in Continuation, whatever. Would be better to make a new swing high. The euro still looks like it's a train wreck and a half. Gold's definitely got my interest. Kind of curious, too, if we switch over to gold real fast. Lordy! Okay. That's how you plot 1 minute charts right there. Jeez. Well, as far as the continuation move to the upside goes, we've got an L2 with a continuation to the upside. Any L1 pullback, that's going to be the zone of interest. What a just flurry of price action to the upside. So keeping it on the L1 perspective and waiting to see what happens if they can pull back to that point. We are going into the open with 4 minutes, and we've got 2 minutes until 9:28, which is the drop point for at the open orders. So those modifications can't take place after 9:28, and there's usually a big bump right into it. Honestly, that would be a fantastic point for a washout if this doesn't do anything up until 9:28. Or like 9:27 and 45 seconds or something like that. Seeing that 9:28 pulse having a move down to 34-ish would be incredible. Now keep in mind this is gold, so you're not going to see that as much, but there are still a lot of stocks that are impacted by this. So 9:28, although not as important on gold, something to still keep our eyes on. NASDAQ still creeping its way down. Gold on the pit. I don't even know if there is a gold pit anymore, honestly. I'm so out of the loop on the pit side of stuff. Everything's just digital these days, you know. It used to open at 820. Whether or not it's still there, I have no idea. So if you're cataloging the first 5, if you were doing it on gold, it would be the 820 to 825 candle. And the majority of that volume is, well, pretty obvious. 1726.8. $20 seconds until 9:28. Careful. No response at all on gold there. More continuation to the upside. The index markets on the 15-minute chart look like they're ready to chop heads off. The S&P, they're trying to get that bull engulfing candle going right into the open. This could be a very interesting day. $30 seconds until the open. Ooh, okay. Well, there's the volatility. I want to see this as an overflush on the highs to pull back a little bit, back down towards that L1 with the open. We're not getting the flush back. There's still a lot of volume coming in at the highs. You can see that volume just waiting at 36.8. That's the POC of this last move up, too. I'm going to see if I can jump ship. This is not pulling back the way that I wanted it to. And if this is going to break out higher, this could get one more big pulse. I was looking for them to fade back off of the highs, but no such luck. Next area of interest is... I'm still waiting for the pullback to 36.8, but I'm not going to stick around trying to pick a top on a gold pulse to the upside when it's not pulling back for me. NASDAQ sellers for the L2 will be looking for a continuation lower. That would be off 45. Still no pullback on gold. I'm going to move that to all charts so I can see that on the other screen. And this is why I jump ship. It's not worth it. Trust, it's not worth it. This thing will rip your face off. NASDAQ's getting close to that L2. This is more of a lower probability, higher reward type scenario in terms of the downside objectives. Realistically, with that in mind, buyers would like to see it break back above the 60s to invalidate sellers here. Sellers want to see it push back off of 60s. Downside objectives would be back to the lows. If we look at this move down from a volume perspective, at some point, what the heck? Okay. From top to bottom, can I do away over there? Well, while NASDAQ's figuring out what it wants to do, I still like that 745 area. Gold is getting closer to that pullback zone, 37.6-ish. Hey, there we go. Oof, man, so they're building a lot of volume here at 740. That's a really nice bear bar for scalpers to try to pump this lower, too. Still hasn't quite made it up to the area of interest yet. 45 up to 58 quarter or so in that area. Gold, still no pullback. There's a lot of pressure coming in here. They're trying to hold it off of this L2, something fierce. In the 15-minute chart in the S&P, it's still got 10 minutes left, but that's looking like a pretty gnarly candle right now. This could just be a bull flag before another pop back up. L2 sellers are still waiting. S&P's almost at a new low. And gold still hasn't pulled back. Is the NASDAQ really going to miss me by 43 to 45? Gold, another wave to the upside. A strong bear bar here on the NASDAQ will get sellers involved with the assumption that it's going to be a lower high and another kind of chain reaction move to the downside. Strong bear bar lower, enticing sellers to drive the move down towards 15s. There we go. Still waiting for 45. Sellers to the downside now. In terms of downside objectives for the continuation move, at least, would be back down towards 96. They're trying to break above L2. Gold still hasn't pulled back. Oh, it's way the heck up there. 39.3 and 37.8. All right, NASDAQ cleanly breaking out above the L2. So there are two variations. Either it's just a hard stop here because you're right at about your 2-to-1 risk point in that area towards the bottom. So it's either a stop out or, in this case, I'm keeping it with smaller size to manage back to the European session lows. It's likely with this kind of rally to the upside, we'll see a quick snapback for those sellers to get out. If they're going to reverse it off of a higher low and a continuation up, there'll probably be a nice big V bottom somewhere around the 30s, maybe 40s. Gold still hasn't pulled back. So from a risk mitigation standpoint, we've got the 1/2-to-1 scalpers objective a little bit further down, which would be at 35. And then from there, that would allow a break even on the final one and still let it go. Gold. Ugh, gold going back to the highs again. New zone, now it's 39.8 and 38.3, still climbing. Euro session highs now. Rejecting off the European session highs a little bit here. Risk reduction standpoint would be at 53, and that would leave my average back at 87.25 for a chance to try to run it back down towards those. I'm not so sure they're going to get 15s anymore, but at least back down towards the 30s. Gold's still just screaming. The move that I would really like to see right now when it comes to gold is a fast, like, V-bottom snapback. Right? I don't want it to be a short or a long-lived pullback where it just kind of grinds its way down forever. I want a quick snapback. Filling the gap. Gold still going. I'm going to hold off so I don't have to keep modifying over and over and over and over again. It's driving me nuts. I'll wait and see if they can give me a little bit more of a pullback. All those swing highs in there is not something that I really want to... Let's see. What's the volume look like on this move up? Obviously, it's accumulation. Jeez, giant brick wall at 800. Yeah, all of the orders are in the VVP, so, I mean, that makes perfect sense as far as an objective goes. The final one, if it does want to go a bit further, looks like they're sorely missing some volume above 715s and around the 2250s. Gold now is up at 41.1. Euro's catching a nice push. They've got falling resistance in the way along with all those moving averages. So they still got some work cut out for them. If we go to the bigger picture on gold in terms of upside objectives, looking at this big giant thrust, this huge move higher, I mean, that looks like a major objective right there at around 1760. Also looks like they could be starting out kind of a spike in channel. Kind of gross looking, but it's right at the bottom. Perfect test. Whoo, lordy. That is a bear bar off the top. Holy crap. Still waiting, not really doing anything of interest until around 54.25, but gold's, well, I'll wait. Nice potential bull trap, trying to get bull suckered in at the top. If this does end up being the top, of course. I love the resistance up here. Gold, come on. Don't chase gold. Don't chase gold. Don't do it. Don't chase gold. Okay, I'll beat it into my head. Don't chase it. It's really hard to not want to jump in. I totally get it. It's tough to not want to jump in when you've got a move that's screaming away like this. 9 times out of 10, though, you know how it's going to work. As soon as you get in, that's going to be the point that was the absolute wrong spot to do it. Nice drive down. First objectives are going to come off in this area. I'm not going to let it sweep back too much. There we go. And now we can let this last bit go. As far as the trail is concerned, I'll operate a 2-candle trail to the downside and just see how far it wants to go. We've got the move back up, and if they are going to approach this violently, it shouldn't pull back very far. And if they do, then fine. They might just vindict that location out. Wouldn't be the first time. But I'm not going to give that trade back. It already gave me a run for my money. Yep. And all the other shorts who were short just got out. This is a broken L2 for you Academy folks. This is an excellent, absolutely excellent example of a broken L2. Came back, shorted into it, did nothing for me. Went back up to the next zone of structural resistance, bounced right back out. This is why you see those bounces in those areas when that happens. Yeah, and the S&P is not doing a thing. Gold's dipping back a little bit. I'm kind of curious, though. What does the volume look on this? The The L1's right there, but the volume void is down at 38. And POC's at 36.8. Man. This isn't lining up very nicely. What's the L2 look like? Ooh, there we go. Yeah, now that's better. I don't mind an L2 at all. Another caveat, that last 5-minute bear bar on the top makes me nervous. If we start plotting some extra candles along with that, I'm not going to want to be buying into that. It stops becoming a pullback and starts becoming juggling chainsaws. Especially seeing the volume dispersion showing that there's accumulation going on. If there's accumulation, that likely means that shorts got stuck. And if shorts got stuck, they probably got stuck from the last volume pump. So if they're short inside here, looks like a lot of the stops probably got hit there, and maybe more there, and maybe more there. But above that, this is where the accumulation has begun. So their average, right, if you take these two, it's going to be right around here. So if it does start dipping back a little too aggressively here, you can see there's a reason for them to want to slide a bit further. So understand the risks involved with this. You could approach it in a couple different ways. The lowest probability, but the highest reward and safest in terms of risk would be floating a stop just underneath L2, because it shouldn't break it if it's going to hold that VVP. And a target would be back up towards a 2-to-1, wherever that lands, which, I mean, should easily be inside the highs. Yeah, it's like a 3-to-1 to the highs. So, you got a lot of wiggle room. Man, another inside test of that wedge. NASDAQ's doing me dirty. They juked me out of that last one. I thought that was going to be a reversal back up. Now it looks like they're starting to fail back down again. Ugh. That wasn't very nice. The euro on the 15-minute plotting a halfway decent bear bar to the downside, trying to get some continuation maybe. That's a nice bear bar on the 15, but it's after all of these bull bars. That's a toughie. Gold's starting to pull back a little bit. Waiting for that L2 and 37.8. We're back to the L1 already, so this is the first zone of interest that buyers will have already tried coming in on. You can see it just chunked right through it. The NASDAQ is really making me regret jumping ship on that last trail, but it would have stopped me out at break even, so it doesn't matter. I mean, even if I would have gone to break even, I would have. I mean, I can say hindsight, I'd be in that all day long, but let's be real here. I would have gone to break even, that would have been a stop out. So, it was a good call, but frustrating. Come on, gold. So first bounce point of interest at the narrowest is going to be up to like 41.4. $12,200, here we come, yep. What a dive off the highs. I mean, absolutely nailed the location, but they screwed me on timing. I can't say it. I screwed myself. The market's never out to get you, right? Feels like it is sometimes. This NASDAQ bear bar down, this thing is no joke. While I'm waiting for, while we're waiting for that, what was the first 5 volume? Because I didn't do that on the NASDAQ. Please tell me it's not at 7:15. Why is this thing taking so long? Okay, no, it's down here. This big dive down could just be a break even. This big dive down could just be a break even. Be careful. If buyers all of a sudden start coming in out of nowhere, we know what's going on. Especially if this is off of an L4 or L5. It's at the L4. That's where the best reversals take place. Gold getting close, 37.8. I'm going to hold off, though. They're plotting some serious bear bars here, and given the amount of risk, I'm going to let what we jokingly say the knife hit the floor. I'm going to wait for the knife to hit the floor in the sense of showing me that there's actually a bottom there, because I don't want to buy into a V-bottom just to see this thing collapse all the way down to 20. You know, that's not really in my thing. Now, a side note, option plays in this area would be a little bit safer. You're not as prone to extreme amounts of risk when you're talking on the future side of things. So there are other alternatives that are viable, but for futures, it's a little tough here. Ethereum and Bitcoin are looking absolutely incredible off of those lows on the 15-minute. In terms of this pullback, we've got all of the volume at the top at 44.3. NASDAQ continuing to the downside. Our concern on gold is coming to fruition. See what the NASDAQ is looking like. Man, what a wild ride. Going on to 10 o'clock in about 5 minutes or so. Ooh, man. Now, one of two things is going to happen here. Bulls are either going to come in aggressively on a dip back to the 51s, or it's going to collapse back lower. So an inside pullback down into these 50s, I'm going to look for a continuation higher, but it's either going to be a very quick response from the bulls or an immediate failure. Weak bear bar. Immediate failure. I'm out. So the reason I like this area is for, and they might still do it anyway, is for the risk reward. The risk is getting in with a risk down below. I mean, it's an incredibly small risk. But the reward, the potential for continuation is up to here. You're like at a 3.5 or 4 to 1. I like that. Even if the probability is only like 35%, that's okay. And you can see why you jump ship when you realize you're wrong. It's not worth staying in. Gold still dipping back to the L2, trying to decide if they want to hold inside here. Monster bull bar back up, but this is now more likely a break even for earlier buyers who got stuck in. A weak bull bar, if it starts turning lower, will be a clue. It hasn't started turning lower yet. Is that a double top? We've got some volatility here on gold. Buyers are trying to get something going. We know they're involved. NASDAQ's trying to plot a V bottom. Normally that wouldn't help gold, but stranger things, right? In terms of the continuation move, we've got a massive amount of divergence all the way down. Ooh, that is a nasty bear bar. Sellers are going to want to see some follow through, and if they fail, it's a really big clue on the 500 tick. That NASDAQ bear bar. I do not mess with candles on the top like that. That look like that. No. Follow through. They're not pushing down. It's driving up. Any shorts who tried taking that are likely stuck. This will probably continue if it dives back down towards the 68s to 70s. Those shorts trying to get a quick pop back out at break even. Give a nice little dip down here for scalpers to go long below previous bull bars back into the 70, 75s. I don't like that bear bar on the top. Maybe a little bit lower now into the 70s. A little further now. Nice little dive down for buyers to try to push this back up. Scalpers will be looking for that initial pop back up through 72 quarter, potentially a little bit further. Nice quick secondary pop. Now we can see if they want to follow along with this last piece. Beautiful washout move. We know shorts are stuck. We know they're trying to get out. Or, well, might have already gotten out. Now we can see if this thing wants to drive. Lock it in a little bit closer here. It's forcing people to buy really high, so I know it's going to be sloppy up here. Quick little dip underneath that previous bear bar. Trying to hold it off, moving it down to 74 just a little bit. I know they're going to get sloppy. Yeah, see, I knew it, you vindictive SOB. Aha! Now let's get it in there. Get going. Don't take it out yet. Keep going. We're getting stuck at the European session lows. Oh, man. Played the thing like a fiddle and it still came back and got me. All right. Well, one of my strings broke, I guess. Ugh, right into 10 o'clock, too. And then it goes up again. Oy vey. And then they slide back down again. Which way are they going to go? This is the only problem that I don't like about them being forced to buy right at the top. It just doesn't have a whole lot of room to go. Luckily, the ranges are really wide. Over on gold, all right, we have a knife in the floor. Now we have something to work with. So in terms of a zone of support, this is a really strong leg down. So I do want to use a bit of comparative movement here in terms of what's been going on. The last time we saw a big drive down on gold, well, actually, the market reversed off of that move was at 0.36. This dropped down 0.5. So a lot of times, these previous reversals will be bound on or very, very similar to what happened previously. This one was 0.53, see? So this last move down, before the market reversed back up, it usually likes equalizing those moves. It came very close. The other thing that I want to pay attention to is this smaller one. Here was that 0.35, and a lot of those, if they are going to pull back a little bit deeper, we'll double those down. So a 0.35 then would be closer to like a 0.3, or a 0.6 rather, 0.367 down back towards settlement, somewhere around there. So that's going to put us in a better zone of interest, and that's going to be a bit closer to an L3. If we look at it from a lower high, we do have that first drive down. A second leg would put a top in at 41.3. So if they start respecting 41.3 and driving down, it's going to start playing ball. That's what we want to see. Still has a lot of ifs, though. Man, NASDAQ. Ugh. Did you hear the face palm there? Oh, come on. NQ and ES taken off. Yeah, they're going nuts. Fantastic drive to the upside. I got juked out of it. Man, that's really frustrating. But we do have some really nice continuation higher. So with the continuation up, if we look at it like we were talking about, they were holding where? On an L4. That's important. When they're holding an L4 and they're reversing back up, that's validating that reversal. An L4, L5 reversal are some of the most common, the strongest, the ones that stick around. Well, we just had one. So in terms of reversals back to the upside, I mean, they're holding. When you have an L4 that continues back to the upside, very frequently buyers will start buying more aggressively. So in terms of aggression, L1s. L1 lines up where? We need multiple things. L1 lines up with settlement, previous major swing. I mean, we've got everything pointing to that zone. You and me both. Yeah, it's frustrating in there, but oh well. I mean, there's going to be more opportunities, and this is the next one. Waiting for this pullback into L1, back to settlement. Gold, I'm still holding off on a little bit. I need a little lower on gold. Getting close. So this is kind of the zone of interest for gold. Now, in terms of the stop points, if you're trying to optimize this as highly as possible, the stop point technically still has to be below the lows. That's where it becomes invalid. So, I mean, we're talking some distance here. The other approach would be saying, you know what, if I'm going to be picking this area up, it shouldn't break down more than like an L3 deviation below this measured move. That's not what I wanted. So you could take your L3, and that would show you that it shouldn't break down much through, I mean, that's at the top, but shouldn't break down much through 29. I like it further up in the 33s, though. Nice little shallow pullback going on here. A two-legged correction to put it right at the top of L1. Very nice bear pulse to the downside. That NASDAQ pullback also hit the top of the 1 minute opening range candle. Yep, big time. That first 1 minute, that first 5 minute, those areas can be incredibly strong for like the entire day. It's nuts how important those first couple minutes can be. Let's see. When you have a chance, maybe in training, how would you interpret if you lay order flow, tick profile, and order flow volume profile? Would it help? And how, if any? Awesome. I like it. Yeah. We'll take a look at it if things when things slow down a little bit. NASDAQ looking for the bounce off of the, I'm a little bit ahead of it, but 808s. I'm in the 809s waiting for that area, but looking for a bounce back up towards like the 827s, potentially further. Gold's not quite there yet. As far as upside objectives go, again, we have a few variables, but the most potent is going to be the 2-to-1 objective, which would be at 29.75. Over on gold, still not doing anything. And there's the 2-to-1. Nice. Pretty straightforward. L1 continuation after an L4. Textbook. Literally. It's in the course. It's very literally textbook. I love that I can say that. That's funny. Magenta is the tick and white is the volume. Magenta is the tick and white is the volume? What? Oh, you sent me a picture. Did you send it to me on YouTube? If you did, that's totally fine. I just don't know how to get it yet. Like I said, this is all new to me, so I'm hunting. Oh, I didn't see a link. It might have been blocked. Hang on a second. I know links are typically blocked in chat. Okay. I have to make a note for myself real quick. Hold on. So as more people transition over to YouTube, add members to always accepted comments. There we go. I just have to make a change in the settings. That way it knows... like for you specifically, since you're a member, it would say, "Oh yeah, it can go through." I just have to set those rules up. Put it on Discord. Awesome, thank you. Let's see here. All right, so I'll put that off to the side for a minute. So I've got the screenshot. Thank you, I appreciate it. I also have a note to update, so we should have that taken care of. And then when things slow down a little bit, we'll take a look. Absolutely incredible bounce off that L1. The next pullback, I mean, it might be an L2, but that'd be kind of a bummer. Starting to pull back, retesting L1 again. Gold did end up having a new low. I cannot believe that was the optimal place to be a buyer on gold. That's nuts. At 36.1. Buyers were comfortable at 36.1 with a stop way down here. Really? Okay. Well, they can have it. That's not my cup of tea. Not unless I know that's what I'm signing up for, and that's not what I'm signing up for on this. Oh, my new shoes are here. Hang on one second. can't believe that bounce. Okay. NASDAQ pulling back a little bit further. This time around, the L1 seems a bit used up. Buyers did try to buy off of it again, but very unsuccessfully. So likely, if it does return back up towards the 12.81150 area, we'll find a bit of resistance. But, I mean, I think this move back up is strong enough to at least cater to buyers trying to get a secondary leg. So buyers likely on the bottom of the L1 as well, just kind of hanging out. More interest will be on the lows of L2, though. Looking at just this most recent move up, excluding that peak at 1008. All the volume's down at 780. And the volume void is there at 85.75, right? Nailed it. We see accumulation in the volume. So we know that sellers are trying to push the market back down. If we include the rest of the volume so far, that's even further solidified by an incredible amount of volume coming in. That adds a lot of context to that. 12.822 is going to be the zone of resistance here. Buyers are going to be looking to backfill some of the VVP action at 85s, 86s. They could still be setting up on gold for that measured leg down, because right now it lines up better for the lower one. So now I kind of hope they do go a little bit further up, just a lower high. Shake people out a bit. Very nice bull bar on the 15-minute gold. Gold buyers will love everything about that. A little more continuation back down. As far as upside objectives right now, I have to assume that the buyers who bought the lows of L1 are feeling neglected. So they'll probably take the first sign of exit if they can get a pop back up. That way we can utilize the secondary one at 77.25 to get back to the highs of that at 810. So we've got an L4 reversal that held an L1 and is now pulling back deeper. Typically, that deeper pullback is to an L2, which is what I'm buying into. Looking for the first continuation back up, unfortunately for me, is a little bit lower at 799. We've got the open and settlement and previous swing high and a million other things lining up there, so I'm forced to have to exit at least something there. All right, buyers swept in. Now they have the ability to try to push up for the secondary one. Now, this breakdown below the lows, this would be a stop point for traders if they're not willing to hold on to risk on this move down. They reversed really fast off of the L3. That does still open the door a little bit towards the upswing. Ugh. There's no nice spot up here, is there? I'll trail the last one. Gold still hasn't pulled back. It dipped back into the L2 and is now sporting one heck of a bull bar back up again. I would like to see a continuation move on gold now, at least, up to 1741, and then for it to back off into the 32s. Gold coming back and tapping this zone again. Nice bull bar. So, I mean, again, like I said, there is definitely a case for buyers here. They held, they put the knife in the floor. I just don't see it viable enough for futures. Not given this kind of movement that gold is seeing. That's a little bit intense. Ooh, there's a big VVP sitting up here. It's got to go a little bit further, but it's in the 90s or so. So you got to see it kind of pump through this zone. But right here is a VVP that's sort of hanging out right at the top of that L2. Very nice continuation back up. So this is the big VVP zone. I'm going to drop the one there at the moving average. It's a little bit early, but I know there's a big VVP that could shove this market right back down again. And my next target is already through up here, so I already know I'm dealing with a weaker, a weaker probability trying to get up here. Got to go a little further. The majority of that volume that's missed was at 805. Big bear bar back down again. Very nice continuation up. Jeez. Well, we'll see. Every other time I've tried to trail, it hasn't let me, but, you know, hey, we'll give it a shot. We are at the objective. So this is the point that I wanted to lock in. I'm going to move my stop up. I have to. All right. So my stop was taken out. The reason why in this scenario, remember, I had to take my target a little bit earlier running into some of this resistance at these previous swing highs, and I wasn't going to risk it, not knowing that I had already had to sit through a trade that, had I gone just all in, all out, would have been a loss. It didn't do what I wanted it to do perfectly. It did it off the L3, but when it continues back up, I'm not trying to make all the way back to the highs. It'd be cool if it does, but that's not my job anymore. Great continuation play back up, but they dipped to the L3 instead of the 2, which means that this response is anticipated to be a little bit weaker. It did something atypical. Let's see here. Order flow tick profile over the order flow volume profile. The tick profile over just the regular volume profile? Why? You'd think they'd look the same, wouldn't you? Why do they look different? I mean, volume at a certain price is still volume at a certain price. You know what I mean? Like, it shouldn't change it. The only thing I can think of is that you might be crisscrossing sessions. So as an example, the majority of the volume comes in the U.S. session. So when you plot it on the U.S. session, they'll line up because that's where the most of the volume comes in anyway. So, I mean, the only thing I can think of is that it might be using a session template that isn't the same. So like if I draw an order flow and I go into it, I can use... you can adjust the session templates and everything based on what it's coming from. So maybe that has a difference on the indicator itself that's not correlating with it. Oh, jeez. I'm not about to mess with all those times, but that's the only thing I can think of, because realistically they should be the same. Volume at a certain price is still volume at a certain price. With a blurry display and the time lag on YouTube, what do you think about the solution? So today I was implementing one of the ideas that I was looking towards in trying to keep YouTube, because again, from the back end side of things, for me, YouTube makes life way easier, so I have a hard time getting rid of it. So instead of the really quick scalping, which arguably people get, are really happy about for a week and then get kind of pissy about after that, and then it comes back a couple months afterward. I mean, it's one of those things that kind of phases in and out anyway, and that would be the only time that would even be useful for it. And most of the time, it's not around long enough to really make much of a difference. So today, as an alternative, is placing limit orders in zones of interest that have a little bit more time to respond, instead of just, oh, bang, in, bang, out. There might be a few of those, sure. I'm still human, and I like a good scalp here and there, but the majority of it is going to be based on limit orders, slower entries, talking about zones way ahead of time, etc. Which I feel like today was a lot easier in terms of trying to figure out, like, following along and seeing what's going on. There was only, like, maybe once or twice that was really fast. So, I'm not sure. I'm not sure which way I want to go with it yet. Back up to the European session high. Not really doing much. Gold, I feel like, is just a waste of time now. Although the lower side of that at 30.9 is starting to make sense. Oh, I see what you're getting at. Okay, so you're talking about comparatively between the actual volume versus the amount of trades that took place. I get it. Okay, now I understand. All right, I was looking at it in a totally different way. In that light, yeah, that would actually be pretty useful information. Looking at it from that perspective, then would display which one was which again? The magenta is the tick and white is the volume. So, like, right here would tell you that there's a lot of small trading going on. It's what a shock. Oh, man, at 3 in the morning or whatever. But then down here, there's a lot of heavier volume. I think it's going to tell you a lot of information that we already know, but it could definitely be useful in the micro phase, where if a move is going really quickly, like if you have a strong move down and you see a gigantic volume node, then placing it on top of that and seeing what kind of volume actually took place. You do it that way, but there's also another way to do it if you want to see the difference in volume, and that would be outside of the order flow. You'd be using the jeez, I don't know, that's a teeny tiny little thing. That is the trade. Oh, the market depth map. That's what it is. And that will also show. Now, the difference, obviously, the market depth map is limit orders that are pending. If you go with the, if you're looking at the difference that you have there, those would be executed trades. So there again, there's another caveat that could be useful. How many of those limit orders that were pending there that were saying that they were huge size were actually just spoofs? I mean, you can see this, that becomes a rabbit hole real quick. I think it could definitely be useful information, for sure. I really like the concept of it. The next question that you have to ask yourself, though, is how much time is that going to take? Is it realistic? You know what I mean? From a bigger perspective, if you're zoomed out on the 15-minute, definitely. I don't think it'd be that big of a deal. But real-time application might be a little bit different. It could give some clues, though, for sure. I like it. It's a really interesting point. And here we sit with nothing happening. Fantastic. All right, well, we are going into 10:30. Natural gas inventories are here, but it's also getting later in the day. Looks like the market's trying to get a big, strong reversal to the downside on the NASDAQ and the S&P. This whole move up is starting to look like it was a giant head and shoulders. We are on the WACD. It just doesn't line up with anything, really. All right. Sellers coming in pretty aggressively. And this is why it's so important to catalog not only when things are doing what they're supposed to do, but doing things that they're not supposed to do. This would be a fantastic example of that. We were picking up on how the L3, that wasn't what was supposed to happen. The likely scenario after an L4 bounces an L1, maybe an L2. Well, it went down to 3. It's like, wait a minute, something's wrong. So the next time it pops up, buyers exit more aggressively, and they become sellers quicker. It makes a lower high, and then ends up rolling back over. Domino effect. The people who haven't sold yet start selling and selling and selling more and selling more, and before you know it, it's at a new low. Very nice looking bear bar on the S&P. NASDAQ's a little big. How's trading How is trading going so far this week? So far, so good. Yesterday was a little bit more challenging, but if we look at the, again, excluding the dollar values because those are irrelevant. I only care about the numbers and percentages. We don't need any of that stuff. There. So for the week so far, an average 62%. Not incredible, but not terrible either. In terms of the average win, average loss, that's where a little bit of the problem comes in. So as far as the trader's math goes, let's see here, 62.03. Oh, I'm so used to showing it on the other screen. Sorry, it's over here. My bad. So we've got, I have no idea what I'm talking about. 6203 minus 100 is the loss percent, so 3797 times the average loss of 125, and then we've got 6203 times 93. So you can see, I mean, the math is a little bit of a struggle this week. It's not been an easy week. A lot of the negative math, honestly, is coming from yesterday, but we're still positive on the week. It's just yesterday was a little bit of a challenge. Today it's back on track again. So. Right around 1-to-1 on average, a little bit underneath it, but higher probability compensates. So looks like order flow depth, it shows only the percent candle. Oh, okay. That could also be where the difference comes in. So maybe it's not as interesting as we thought. Oh, only the present candle. Oh, okay. Well, never mind then. I take it back. Maybe it is interesting again. Gold's getting down there, 1730.9. Okay. Well, we already had the giant volume pulse. And that was at the bottom. It's getting too late. I'm not even going to worry about it. I'll let it do whatever it needs to do, and I'll end the day on the positive note and not worry about giving anything back going into the end of the day. So feel free to get those last questions in. We'll get those covered for you. And then we'll rock and roll. Whoops. Ah, crap. Get added on accident. I was trying to move my window, sorry. Sellers trying to pressure back down again. Gold pile driving lower. Yeah. Oh, you might not have heard me. When I was going to move the tab, I clicked the commercial thing. The buttons, I mean, the button's just there. I don't... It preys on my bad habit of clicking excessively. Do you have a vid on your levels you use? There's a few of them, yeah. The morning DPs, the morning brief levels. There's a few different videos that cover it. I'm not, off the top of my head, sure what the most recent one is. Hang on. I'm dead serious. That's funny though. Where is... Hang on. Let me go into search. And... Oh, no, morning brief's going to give me 1.5 million different things, isn't it? Let's use my brain for a second. DP. Don't search that on Google. We've got a few different ones. Might just have to make a new one. It's obviously been too long. If I can't even remember what I called it. No, sometimes I'll also put the video, but I don't think there's a video for it. Yeah, I'll have to make a new one. If I can't find it easily, then it's been too long. Ooh, lordy, 7:15 coming back into play again. Remember, that was the deviation off the European session. YouTube doesn't show who's in the live trade room? Correct, yeah, it's a privacy thing. But that said, if you're in the Discord chat, then, I mean, you can chat in there too. I see both. When people want to send me private messages, it's usually in Discord or... I mean, depending on how close they are, they have a lot of different ways, but Discord's usually the most common. On occasion, I'll get a message sent to me on the send us a question thing on the main page of SSFTG. Not the fastest way to get a response, but that is a way that'll work too. So let's do final call for questions and we'll wrap it up. Overall, pretty strong day, especially on that last bump to the upside. That was an incredible rally higher. And here we sit. Nothing. Gold dropping through the lows. NASDAQ's back to 715 zone of support. S&P still looks really strong. Euro is continuing down, although not the cleanest. All right. Well, that's going to do it for today. As per the usual, you'll be able to watch the recording back. I think YouTube just posts it, so it should be good to go. If I miss any questions, though, you can you tell my muscle memory on how I'm used to ending the stream? It's not recording. You don't have to worry about recording it anymore. It's already there. Yay. If I miss any questions, though, feel free to shoot me an email, jhb@ssftg.com. Otherwise, though, enjoy the rest of the day. Rest up. Hopefully you had a great day of trading, and we will see you all tomorrow, right? Have a good one. We'll talk to y'all later. Thanks.